Kranthi Bathini of Wealthmills Securities, a strategist and at Wealthmills Securities, joining us on the show this morning. Kranthi, thank you very much for taking time out. What are you making of the markets opening in red for a second consecutive day? What's dragging the markets?
Shweta, good morning to you. Yeah, there was no respite for the selling. And today, as we are speaking, market has been taking the support around 25,500. That's acting as a key support zone for the market. Today, this morning, market Nifty have violated the range of 25,500. That's creating some kind of extra pressure on the market. If this trend continues, there would be some more selling pressure can accentuate. The current earnings season is not able to entice the market at this point of time. That's creating the pressure on the market at this point of time. Foreign portfolio investors have been the net sellers. They sold a tune of around 25,000 crores till date only in the month of Jan itself. So that has been creating the pressure on the market by and large. And coming to the global geopolitical environment is concerned, the kind of looming uncertainty and the rally we are witnessing in the metal prices, especially precious prices, that has been driving some kind of a money in the medium to short term towards commodities. That's where the equity market has been facing some kind of a headwinds in the medium to short term.
Headwinds, of course, continue to persist, and coming to sector-specific, outlook there, and I'd like to pull up those numbers. Of course, the IT pack is in deep red as Q3 numbers continue to come in. It's the benchmark which are dragging both, Nifty and Sensex, and in fact, as of yesterday as well, looking at the numbers from yesterday, it does look like it's not a very great start to the week. Looking at how IT pack is doing right now, Kranthi, TCS down 0.5%, Nifty also down, Infosys also down almost 0.4%, Wipro down 1.3%. So IT sector continue to drag the index.
Yeah, the results have been mixed. Infosys have come up with a decent set of numbers. Their guidance has been good. Whereas with respect to Wipro and all, the numbers looks disappointing. That's where the drag on the market, and also the companies declare the results. Reliance Industries results also not enthused the market. But due to the headwinds in the US and the uncertainty around the trade deal and the macros running around US economy is concerned, that has been creating some kind of a selling pressure in the IT pack in the medium to short term.
Creating some pressure there in the short and the long run. I also want to quickly take your views on silver and gold. Of course, looking surprisingly well there as far as silver is concerned on the back of industrial demand and the geopolitical uncertainty, and gold is not too far back alone. In fact, climbed nearly 7.5% in the first 20 days of this year alone. What's the trajectory looking like to you from here? Are we looking at some sort of correction? Because, every person you speak to say don't invest in gold and silver just as yet. They're overpriced. But, the views are, of course, very mixed. Given the uncertainty persisting, what's your view on gold and silver?
Very interesting, Shweta. And silver and gold, after a 47 years span, they have been outperforming. And normally, silver and gold, they run in a very long cycles. That's what the tendency of the precious metals are concerned. Of course, silver is a high beta when compared to the gold is concerned. And the rising demand that has been coming from the alternative energies and EV, the industrial demand has been taking the silver prices, and also too much speculation is going on with respect to the silver and gold is concerned at this point of time. Normally, the tendency of the retail investors are concerned whenever something that is rising, too much money will follow. That is the tendency we are witnessing. And also the other reason for the rally in the silver and gold is the uncertainty, geopolitical uncertainty that has been looming around the world, that has been making the investors getting into precious metals. Of course, given the kind of rally is concerned, normally we tend to say silver and gold are the safe havens, but the kind of rally what we witnessed, I don't think so. They are the safe havens in the medium to short term because they have been run away ahead of their prices. With respect to fundamentals of silver and gold, there are no fundamentals. They're always precious. Uh, 2000 years back and today. Only thing that's driving the prices is the demand and supply. There is a greater demand and supply, and many of the central banks we have witnessed they are reducing their dollars and the exposures to U.S. treasuries and increasing their gold reserves. That
That's right.
has been one of the key narrative for the rise in the silver and gold.
has
How
been
far?
has been a key narrative last year, and whether it's going to be a key narrative going into this year, given how the kind of uncertainty we've seen coming in from US President Donald Trump. I have to ask you, Kranthi, the EU-US trade ties are also souring, given renewed tariffs that Donald Trump has now threatened over Greenland on some of its closest allies. On the back of that, and of course, FPI outflow, which has also dragged India's benchmark indices to 3-month low on 19th of January. I have to ask you, do you think Indian markets will remain resilient to external shocks and pressures? Because reports coming in suggest that most economies and most businesses have now found their soft spot. They have now found their strength, and most of them today are resilient to what may come from US by the way of tariffs.
Absolutely, Shweta. The one thing is the Indian long-term narratives, the fundamentals are quite strong. And still, as on date, the IMF has reiterated the consensus view of India's growth around 7.5%, which is phenomenal in a world which is filled with complete uncertainties. So by and large, India's story is intact on a medium to long-term basis. But what is weighing on the market in the medium to short term? The foreign portfolio investors have been wary on Indian markets. The reason is one thing is the rising rupee, depreciating rupee, and also the trade deal, which has been an overhang for the many of these investors, and also in the medium to short term, the results earning season is not enticing the investors, and also the global investors are concerned. They are finding some kind of a better growth prospects, like the TSMCs of the world. The narratives has been changing. The TSMCs of the world and the AI stories have been taking the flows from India. Whereas India is concerned, it's good. It's a long-term good growth story. But in the medium to short term, the narrative has been towards these kind of new age business models that has been taking away. So in a emerging space, Indian markets looks interesting and compelling, but due to the global uncertainty, the foreign portfolio investors have been in a wait and watch mode at this point of time. They're not ready to jump and buy, put their stakes on Indian markets at this point of time. This is the mood of the market. The sentiment has been quite negative in the medium to short term.
The sentiment remains negative, and as far as FPIs is concerned, not in mood to buy just as yet as far as Indian markets is concerned. If anything, they're leaving Indian markets very, very quickly with each passing day. Kranthi, Bathini, always a pleasure. Thank you very much for taking time out for joining us on the show this morning.
Thank you, Shweta. Always my pleasure to share my views with you.